I know even you have referred to the central bankers as a cartel. And it seems like the central bankers even know it, but they're kind of forced to put on these puts and to keep injecting liquidity and money printing into the system because the whole thing needs it. I mean, we're built on credit, so we have to keep issuing credit or the whole house of cards falls down,
You
right?
raise a very interesting point. It's not a new one in U.S. monetary history. We had Thomas Jefferson facing off against Alexander Hamilton over whether we should even have a central bank. Hamilton argued that we need it so we can have a unified money system across our states. We need it to consolidate our debts so that we can raise credit for this fledgling, impoverished new country. Jefferson wrote a long essay to George Washington, who was president, pleading with him, don't approve the quote bank bill. He said that this would be going way beyond the powers that were being transferred to the presidency and Congress. And he thought that it would be very dangerous and it would be used to help the bankers at the expense of the people. And it would build up national debt, and that would require more taxation, and that would be a yoke placed as a further burden on their necks. After these persuasive essays by both founding fathers, Washington, after hesitating, did rule in favor of having it. So I ask myself, even now, all the things you wouldn't want fixed, wouldn't it be the cost of capital? That's the important price for a market economy. And yet we empower this group of 12 voting members who meet 8 times a year as a committee to decide what should be the cost of capital.
It's crazy.